Another mixed week in the markets. It is still summer, so this is definitely to be expected, but we did see a lot of new merchandise, new IPOs show huge gains with heavy accumulation, but we also saw older growth names struggle a bit, undercut some of their key moving averages, but on the bright side, it was on lower volume. We also saw steel names have a wonderful week. Last week I had STLD in my watch list, and I was looking for a breakout of this flag, and it did so perfectly in good volume, and the next 5 days just ripped into all-time highs. We also saw NUE, huge move above this consolidation, broke into all-time highs, so steel names did have a great week. They are a bit extended right now, but this is definitely a theme to watch moving forward. And of course, with the indexes, we did have a little bit of a rocky start throughout the week, having a bit of a sell-off, especially in the Nasdaq, but we did end off strong, especially Dow Jones and S&P, closing at all-time highs, with the Nasdaq composite very close to all-time highs as well. So going into this week, I am a bit cautious, but still bullish, with indexes still continuing to grind higher at all-time highs. It's hard to not be bullish, especially with all the new merchandise showing great accumulation. But since it is summer, you do want to take your profits when you can. You want to get aggressive in those stocks with quick moves and then take your profit, move your stops as quick as possible. That's something I've kind of been struggling with. I did mention that I'm trying to take profits, but sometimes I don't take it quick enough, or sometimes I'm hoping that this time is going to change and it's going to start a power trend. But I got to get 2020 out of my mind and really take those gains when I can, because that's really what's been helping my equity curve. When I'm trying to hold for the bigger move, especially in this environment, that's when it's been tough and I actually end up taking a loss usually. So I'm really going to focus on taking my gains as they come to me. As Mark Minervini says, we're looking for singles and doubles. We're not really looking for home runs, because those singles and doubles can really add up over a long period of time. So that's what I'm going to focus on, especially in this environment. When you have gains, you got to be thankful and really take them as they come, because they don't come that often, especially in such a choppy environment. So yeah, like I said, that's what I'm going to focus on. I'm still bullish for the rest of 2021, hoping we have a great end to the year. But let's just get right into it with our stock market outlook, starting with the Nasdaq composite. So starting with the Nasdaq composite, as I have it pulled up here, we currently have 4 distribution days on the Nasdaq and 5 on the S&P 500. Taking a look at this chart here, it has just been going sideways for the past few weeks. Early in the week, we did have a bit of a pullback to the 21 EMA. We bounced back nicely and closed above the 10 EMA towards the end of the week. Right now, it's just consolidating once again, and I do see a bit of a ascending triangle pattern here, so we might actually get a upside move breakout soon. Might go sideways for a few more days and then break out into all-time highs. That'll be very good for the overall market. We are also seeing Apple, some big names starting to set up once again. So if those could get going, definitely the tech market can get going as well. If we take a look at the S&P 500, taking a look at the S&P, this is actually much stronger than the Nasdaq currently. We're just continuing to grind higher into all-time highs. We closed at all-time highs on Friday, and on August 10th and 11th, when the Nasdaq was weak, this was actually pretty strong, just kind of went sideways or closed higher on the 11th. So this is interesting to see. We didn't really have any pullback here, so we'll see if we do get some in the S&P and Dow Jones in the near future. Dow Jones as well. Take a look, just continued higher, bounced off the 21 EMAs nicely, closed into all-time highs. But like I always look at the ETFs and other growth factors like the IBD 50. We are struggling in the IBD 50 here. We got rejected by that key 4650 level, pulled back to the 10 EMA, actually pulled back to the 21 EMA, but found some support. So let's see if we could just, maybe U-shape up forward. That would be really beneficial for the growth stocks. Right now we are struggling in growth land. So if we see continued weakness in the IBD 50, of course there'll be continued weakness in growth names. If we take a look at IWO, which is another growth ETF, but for small caps, we are just right on the 200-day moving average here. So it would be very key for us to stay above it. We are struggling around all these moving averages. If we see here a bunch of red days, bunch of just choppiness, has been very difficult for growth names. So this is definitely one to watch. And if we take a look at the IWM, which is the Russell 2000 ETF, which focuses on small caps, we see here for the past 8 months, it kind of just been going sideways, no real direction, just straight consolidation. And recently we have been seeing some rejection off the 50-day moving average. So for the short term, I'd really like to see it get above it. But other than that, really nothing much to see until we get above that 234 level or below this 210 level. Then we'll really get an idea of where this thing is going. If we take a look at the VIX quickly, has just been going down for the past 2 weeks. So I wouldn't be surprised to see maybe a quick spike up, get some volatility back, so maybe that would incur a sell-off in the markets, but who knows as of now. And lastly, if we take a look at the ARKK ETF here, we see I've been watching these higher lows, but recently we kind of got a lower high up here, so this is definitely one to pay attention to. We kind of broke down the 50-day moving average. We have retested it a few times, but found some nice support off it. But on Friday, we kind of broke down below it. So hopefully we could get some undercut, maybe some power of 3 action here. If we could get above all these EMAs on strong volume, have another rebound for growth and get above this 126 level, that would be very, very bullish for growth names. But besides that, it's very, like I said, it's very choppy. A lot of growth ETFs are struggling. A lot of small caps are struggling, while the overall indexes are just continuing to grind higher. So it has been a big divergence pretty much all of 2021. So let's see if we could fix that ending the year. But in terms of my watch list for this week, I do have about 16, 17 names that I'm watching. Not all of them have setups for the week, but these are just names I want to pay attention to moving forward. So let's just get right into it, starting with Airbnb. So Airbnb actually just announced earnings on Friday. We actually had a gap down to start the day. Take a look at the intraday chart, gap down. Dropped to 144 and just continued higher the rest of the day. Closed at the highest point of the day at 152.76 on huge volume. If we take a look at the daily chart, it had a nice engulfing candle, bounced off the 21 and closed above the 10 EMA. So that's exactly what you want to see. With earnings, it's always a reaction to the earnings, not the actual earnings itself. And if we see here, all we're looking for is a move above 153. So 154 is what we're looking for, and a close above 154 would be very good for the stock. So that's really what I'm watching for Airbnb, if we could continue this momentum off earnings. So the next stock I'm watching is AMD. So after the huge move in AMD going up to 122.49, I had a controlled pullback to the 10 EMA, bounced off the 10 EMA nicely. So this is definitely one to watch for continuation up until new highs. The reason I'm not going to really trade this is because NVIDIA has earnings on August 18th, I believe, which is a Wednesday. So there isn't much time for AMD to do much in the next 2 days. I'm assuming it's just going to go sideways or just pull back until NVIDIA releases earnings. But this is definitely one to watch after bouncing nicely off the 10 EMA. The next stock I'm watching is ASAN. So ASN was flagging nicely off the 10 EMA for the past week, and on Wednesday had a nice inside day on lower volume. Thursday we broke out expansion on good volume, and then we actually hit all-time highs but closed right below that pivot of 78.73. Friday we had another inside day on lower volume. So moving forward, I just want to see this continue to build above the 10 EMA, continue to go sideways for maybe 1 or 2 more days, and then break out above that 79 level, close above 79, and get above that 80 level to eventually get to 90 and 100. That's really what I'm watching for with ASAN. It's a very strong stock. And if we take a look at MarketSmith to analyze the fundamentals, we see here on the EPS, it is still in the negatives, but that is because they are a newer growth story. So most of the times they don't have the earnings because they are reinvesting in themselves. But what's good to see is the sales growth. If we take a look for the past 8 quarters, they have been growing at a rate of over 50, almost 60% quarter after quarter for the past 8 quarters. If you take a look at the fund ownership, it has almost quadrupled from September 20th to June 2021, so that's less than a year. They have almost quadrupled its fund ownership. And if we take a look at its gross margins, it has been growing at a rate of 80% quarter after quarter. So this is amazing to see. A lot of fundamentals with this stock is exactly what you want to see in a strong growth stock. So this is definitely one to pay attention to moving forward. So the next stock I'm watching is DoorDash. So DoorDash is another stock that had earnings on Friday, gapped down below its 21 EMA, but closed at the high of the day, engulfing Thursday's candle, very similar to Airbnb. If we take a look at the 5-day, 5-minute chart, it gap down huge on hit 177 and then closed near the high of day at 195. So a huge move on huge volume, 6.92 million shares traded. So that's exactly what you want to see for earnings reaction, exactly what I said with Airbnb. So essentially what I'm looking for with this stock, since it got above that turbulence zone, I really want to see it stay above it. But I'm really looking for basically a red to green move, and which is what I'm going to be looking to enter the stock. Maybe if we get a gap down on Monday to 192, 191, and then as soon as it goes green, I'll be looking to enter there. Obviously it might not happen, but that's really what I'm watching for with DoorDash, because it definitely has the chance to hit those 200 levels and then eventually retest the highs of 256 in the near future. If we quickly take a look at MarketSmith to analyze its fundamentals, if we see here, gross margins are above 40-50% for the past few quarters. Fund ownership has been growing from 323 to 432, so that's great to see. Earnings per share is still in the negatives, but it is growing, so it is almost getting in the positives. Maybe by 2023 it'll be in the positives. positives. And if we take a look at its sales growth for the past 8 quarters, it has been over 100% quarter after quarter. So that's exactly what you want to see. It is still in its IPO phase, hasn't hit new highs yet, but once it does, this could really go, and I'm really going to pay attention to this stock moving forward. So the next stock I'm watching is DDOG. So DDOG has just been consolidating its gains after gapping up on the earnings gap up, bounced off the 10 EMA perfectly, and that would have been the perfect entry if you were able to get that. In terms of now, there really isn't any entry as it closed at the highest close it's ever had, but now I just want to wait until a better setup. It is a bit extended from the 10 EMA, so I just want to see more consolidation, more sideways action as it prepares for another leg up. This had a huge move from basically 69 all the way to 137.50, so more consolidation might not be a bad thing. If we quickly take a look at MarketSmith, earnings have been amazing. EPS growth have been over 100 except for that one quarter, March 2021, but then it found its rhythm back again, June 2021. Sales growth have been above 50%. Earnings per share is in the positives. Fund ownership has been growing each quarter, and it's now in the thousands with 3 quality funds. And if we take a look at gross margins, it is above 70% quarter after quarter. So everything with DDOG is very strong. There isn't really any setup as of yet, but this is just one to pay attention to for any possible setup for you to enter the stock, because this stock is screaming that it wants to go higher. So the next stock I'm watching is DOCS. So DOCS is part of that newer merchandise that I've been talking about that have been showing great signs of accumulation. Take a look, it just went from 52 to all the way to 83 this past week. Had an inside day on Friday on lower volume, but this is another one that I'd like to see more basing of. It is a bit extended from the 10 EMA, so this is one of those stocks that doesn't really have a setup as of yet, but this is something you definitely have to keep on your radar if a setup comes. If we take a look at MarketSmith for DOCS, the fund ownership just released, and it already has 9 quality funds in the stock out of 158 funds. So that's very telling that a lot of these good funds are getting into the stock early. EPS is already in the positives. Gross margins are above 80% quarter after quarter. And if you take a look at the EPS growth, has been amazing, of triple digits for the past 4 quarters, and above 70% sales growth for the past 5 quarters. So that's exactly what you want to see in a strong growth stock, and definitely a stock I'm paying attention to moving forward. And the next stock I'm watching is DXCM. So Dexcom is a stock that just released earnings on July 29th, had a little gap up, but during the day had a huge move on huge volume, closing near the high of the day at 515. For the past 2-3 weeks, it's just been consolidating its gains and letting the EMAs catch up to price. Now it has a nice little bull flag going on, and I would like to see basically a retest of the 21 EMA, maybe just a quick undercut and have like a bullish pin bar or a hammer reversal off the 21 EMA to get a holy grail setup. If we could do that and then continue higher, that's really what I'm going to be looking for an entry. But I just want to give it a few more days to see how it acts around this 21 EMA level. If we undercut and rally, or if we just completely fall down below it, will be telling. The past few days, the volume in the red days have been much higher than the green days, so that is a little bit concerning, but I want to see how it acts off the 21 day like I mentioned, to see how this acts. The next stock I'm watching is NVDA. So as I mentioned, NVDA has earnings coming up on August 18th, so this is one I don't want to play before earnings. I want to see the reaction first and foremost, but the recent action I've been seeing is quite nice, has been basing for the past 2 months, flagged off the 21 EMA and bounced off nicely, closing back above the 10 EMA. So earnings is definitely going to be a tell if we could move into all-time highs. Taking a look at MarketSmith real quick, the quarterly EPS for the past 5 quarters have been above 60% quarter after quarter. Sales growth has been above 40% as well. EPS has been growing nicely year after year. The fund ownership has been increasing as well. There is already 4,500 funds in this, so that's crazy, like huge amount of funds are in this with about 6 high quality funds. And if we take a look at gross margins as well, it is in the 60s quarter after quarter, so this definitely has room to run. It just recently did a stock split, so there's definitely a lot of maybe new buyers that would be looking to get into this, as now it's cheaper, even though it's not technically cheaper. But let's take a look how it is after earnings and revisit it. The next stock I'm watching is Roblox. So Roblox is another stock that has earnings on Monday, August 16th. If it didn't have earnings, this would be one of my favorite setups to play. 2 bullish pin bars off the 10 and 21 EMA with a nice little flagging action here, inside day as well. So obviously we want to wait till earnings, see how it reacts, but for now it's just a wait. So if we take a look at MarketSmith to analyze Roblox, we take a look at the fund ownership. It went from 0 to 277 in less than a year, with 3 high quality funds investing in this stock. Take a look at the EPS growth. It's still in the negatives, but that is mainly because they are a newer name as well, like I've been mentioning. But the earnings aren't really there yet as they reinvest in themselves. With sales, that's where the story is really at. For the past 8 quarters, we have seen over 40% growth. And for the past 5 quarters, we have been seeing accelerating growth. So that's exactly what you want to see. 46 to 68 to 92 to 110 to 140% for the past 5 quarters. So this is exactly what you want to see in a great stock. And it is setting up for a nice move above that 87 level coming into earnings on Monday. So we'll see how it goes. And the next stock I'm watching is Snapchat. So Snapchat continues to consolidate its gains from its power earnings gap up. It has been holding the 10 EMA nicely, but on Friday it actually broke down below it. So I wouldn't be surprised to get a 21 EMA retest. Coincides with that 72.88 support level. So if we could get there, bounce off it, that would be a nice little low risk entry. But as of now, it's not doing anything wrong, just continues to consolidate. And once the tech market maybe is ready to go, this might be ready as well, as we continue to consolidate before we get ready for the next leg up. Nothing too much with Snapchat, just patient waiting game for this one. And the next stock I'm watching is Snow. So Snow is finally starting to show signs of life. There isn't really a setup as of yet. It's just been chugging along higher and higher. Finally back above the 10 and 21 EMAs nicely, and it's starting to trend nicely as well. So no real setup like I mentioned, but definitely one to watch. If we take a look at MarketSmith, the gross margins are above 50% quarter after quarter. Fund ownership has been growing from 600 to 1,015 in less than a year. 3 quality funds are invested in this as well. If we take a look at the sales growth, it has been over 100% for the past 8 quarters. So that's exactly what you want to see. Earnings per share is still in the negatives. It is still a newer stock. So like I've been mentioning for the past few stocks, that's okay. But everything else is lining up nicely. And this is still early on in the stock. So this is definitely one to watch moving forward for a potential setup. The next stock I'm watching is SQ. So SQ has been weak as of late, trying to break out into all-time highs. Got rejected a few times, and then now it's starting to flag off the 10 EMA. But the good news is it was on lower volume. As you see here, the pullback days have been on lower volume, and did find some support off the 10 EMA. So I want to see if this could hold and bounce back up, get above this flag here around 275. See if we could break into all-time highs very soon. I'll be looking for an entry actually above the 272 level because there was an inside day on Friday on lower volume. So I'll be looking to enter there to see if we could get some momentum. It is a low risk because my stop would be right below the inside day. But yeah, that's pretty much what I'm looking for with SQ. And the next stock I'm watching is Tesla. So very quietly, Tesla has been acting very well for the past few weeks after breaking out of this little inside day action here from the 655 level all the way to 726, just consolidated for the past 2 weeks. And it had a nice little downtrend line breakout on Thursday on strong volume. Friday it tried to continue but got rejected. So moving forward, I just want to see it get above that 727 level, get above and close above it on strong volume, and see if we could get ready for the next leg up. Has been acting well, just been going up, going sideways, consolidating, going up, sideways, consolidating. So I definitely think Tesla is ready for the next leg up on a strong move. Quickly take a look at MarketSmith. EPS growth for the past 6 quarters have been above 100%, which is great to see. Sales growth for the past 4 quarters have been accelerating and have been growing at a nice rate, 39, 45, 74, 98%. EPS growth year over year is growing 122% for 2021 and estimate to be 41% 2022. Fund ownership has been increasing as well, with 3 high quality funds owning the stock. So definitely lots of room to run for Tesla and see if we could get above that 725 level for another strong leg up. So the next stock I'm watching is U. So Unity Software is another stock that doesn't really have a setup as of yet, but it did just release earnings on August 10th and had a huge 3-day move going from the low of 105 all the way to 129 on strong volume. It broke out of this 114 pivot here, and for the next few days I just want to see it consolidate, maybe pull back, let the EMAs catch up to price for a possible entry. But as of yet, you don't want to enter because you don't want to chase. If we take a look at MarketSmith real quick, gross margins are above 70% quarter after quarter. Fund ownership has grown from 225 to 493 in the past year, with 1 quality fund entering this stock. And if we take a look at the sales growth, it has been above 30% quarter after quarter. Earnings growth are still working on it because obviously like a newer growth story like I've been mentioning. There is a lot of overhead resistance in this stock, so this is definitely one to watch. For all those people owning it around the 170s, 160s, they may be looking to sell. So this might have some turbulence moving forward, but this is definitely one to watch to see if there's a nice turnaround. If we take a look here, had a nice little inverse head and shoulders. Now we got past it, so maybe maybe this could be the start of a new leg up and a new trend. So definitely U is one to pay attention to. So the next stock I'm watching is UPST. So UPST is another stock that had a huge post-earnings move. If we take a look at the volume, the past 3 days have been very significant, showing you that that funds are really accumulating the stock and they don't care what price they get in at. The stock went from 158 to 203, 205 in the past 3 days, and had a nice little gap up, and it closed above all of its resistance into all-time highs. So that's exactly what you want to see in a strong stock. Obviously, there's no setup as of yet, and it is very extended. And with UPST, they are known for pulling back very hard, so you don't want to chase. You want to wait for a low entry setup, and you want to wait if this could come back to the EMAs nicely without pulling back too hard on too much volume. Maybe just a low volume pullback is some digestion, some sideways action is what you'll be looking for. If we take a look at MarketSmith here for UPST, the gross margins are 100% quarter after quarter, which is amazing. Fund ownership has grown from 53 to 208 in half a year. And if we take a look at EPS growth, 821% for 2021 and 25% for 2022. If we take a look at sales growth for the past 4 quarters, it has been growing above 30% quarter after quarter, and EPS and sales growth for the last quarter has grown by over 1,000%. I don't even know how that's possible, but that's why this stock is showing great signs of accumulation, and funds are really piling into this stock now. So this is definitely one to watch for another setup moving forward. As of now, it's just a wait. And the last stock I'm watching for the week is ZI. So ZI has a nice formation going into next week. Had a 3-day symmetrical triangle that broke out and found some resistance at the 63 level. And on Friday, we had an inside day. So essentially what we're looking for is a break above the 63 level, break above this inside day high with a stop loss around the 61.81 level below the inside day low. Very low risk, high reward situation. And if we could get above that 63 level, we could definitely retest those highs in the near future. So that's really what I'm watching for with ZI. If we take a look at MarketSmith real quick, the gross margins are above 80% quarter after quarter. The fund ownership has been growing from 191 all the way to 335 with 5 high quality funds. EPS growth year over year, 46% and 31% projections. If we take a look at the EPS quarter after quarter and sales quarter after quarter has been growing at a tremendous rate. EPS has been growing above 100% quarter after quarter, sales growing above 50% quarter after quarter. So this is exactly what you want to see. Very strong stock, very strong fundamentals, definitely lots of room to run to see if we could hit all-time highs very soon. That pretty much sums up my stock market outlook and weekly watch list for the week. If you guys like the new format I'm doing with technical and fundamental analysis, leave a like down below. Leave a comment down below if you want me to change up anything. But other than that, if you haven't already, please hit that subscribe button. Thank you very much for watching. Hope you guys have a wonderful week. Take care.